Today's trading in the Dow produced a bullish hammer harami with stochastics pretty close to the oversold area. Pretty close. Same area where the markets bottomed out before. So this implies that this could be a support area. A positive open tomorrow would tell us they were probably taking the markets back up to test the 50 and or the T-line, which would be further confirmation that this area is acting as support. The S&P 500 also showed that same indication. Back here where we had the bullish engulfing signal that started the uptrend, now we have a hammer bullish harami, which again makes it very simple. If they open tomorrow's trading with a positive note, the pre-market futures are positive, the likelihood is this is the support area. They're going to at least bounce back up to the moving averages. And the same scenario occurred in the NASDAQ. Bullish engulfing a month ago, hammer, harami, stochastics toward the oversold area. The market's going to move in the direction of how they open tomorrow. Our recommendation on buying Scotty, both the calls and the call spreads as well as the stock, was based upon a very simple candlestick pattern, which is what we call the bobble. Notice coming out of this fry pan bottom type pattern, the first resistance level was the 50-day moving average. Once it got there, it was indecisive trading, but one indicator that was not breached was the T-line. So once they hit a resistance level and they couldn't close back below the T-line, we call this the bobble. That's where it's profit taking at the resistance level, but indications that they weren't selling it off, that the next move was probably going to be back up through the resistance level, the 50-day moving average. And as you can see, it's worked out nicely because now that bobble turns into a J-hook pattern, making our next target fill in this little gap over here in this range, and then possibly all the way back up to the 200-day moving average, testing the recent highs. This is a case where we've seen the market was trading off over the past 3 days until it did a little bullish harami today, and that created a strong move and a bullish moving stock. At the same time, we recommended going short on Western Digital, WDC, because of the slow curve, the resistance level met, Doji gap down on Friday, and once they opened it today, they started trading it off, confirming this little slow curve to the downside. Closing right here was basically a close below this level, telling us we could possibly be in wave 3, which should or could have the potential of taking Western Digital all the way back down into about the $40 range. Being able to analyze what each chart is telling us and knowing what the market is doing in general allows candlesticks investors to have their portfolio maybe not all long or all short at one time, but analyzing each chart on its individual basis to tell you what positioning you want to have, so you're, even when the markets are moving relatively sideways, you can still be both long and short and making good profits. That'll be it. We'll see you in the chat rooms.